All right, tribe, settle in. Time to jack back into the matrix. We're going on another data dive, peeling back the layers of the market's code. Because somewhere between the signal and the noise, there's a truth the suits don't want you to see. And we're here to hunt for that glitch, the one in the machine. So first up, let's tune into the broadcast from the top of the tower. This is the official story, the narrative coming down from Goldman Sachs. And you gotta listen to the language they use. Complexity. See how calm that is, how detached? They're painting this picture of a system that's, complicated, but ultimately under their control. A puzzle they think they've already figured out. But here's the ape theory. What if they're looking at it all wrong? What if that complexity they talk about so calmly isn't a feature, but a bug? A deep, fundamental glitch in the system's plumbing that they either can't see or maybe don't want to. We're opening a loop here, people. There's a hidden danger lurking just beneath the surface, and we're gonna find it. And this, right here, this shows you the total disconnect. The official story you'll hear on TV, oh, it's just a garden variety pullback, business as usual. But anyone who's actually watching the charts, anyone with their boots on the ground, knows something else is up. You can feel it. There's this nervousness creeping in, this low hum of anxiety that their fancy pants models just can't measure. Okay, so to figure out where we're headed, we have to go all the way back to the source code, back to the original glitch. And forget everything you heard about it being a meme stock. That's just the story they fed everyone to dismiss it. The GameStop saga was a proof of concept. It was the very first time a bunch of us retail traders, all connected, stress-tested the core of the market. And guess what? We found a massive crack. Now get a load of this. This is where the whole thing just breaks from reality. At its absolute peak, the short interest on GameStop, that's the bet that the stock will fail, was 114% of all the shares available to trade. Just think about that for a second. More shares were sold short than actually existed. That's not a bad bet, people. That's a broken system. It was the perfect rocket fuel for a squeeze of legendary proportions. And here's the bill. That little glitch ended up costing the short sellers a reported $6 billion. This wasn't just a handful of hedge funds having a bad day. No way. This was proof. It proved that a coordinated swarm of regular people, the apes, could generate enough force to actually challenge the big guys on their own turf. Which brings us right to the heart of the conflict. On one side, you've got us, the apes. All we want is what the market is supposed to be about, fair price discovery. Where the price is based on actual supply and demand. But on the other side, you have the house. The market makers, who can supposedly provide infinite liquidity. It's kind of like playing cards with a dealer who can just magically create more aces whenever he needs them. The ape thesis is that this trick is used to hold down the real price and make sure the house always wins. Now, let's fast forward a bit. That GME glitch? That wasn't a one-and-done thing. Oh no. It was a warning shot, a tremor that sent shockwaves through the entire system. And 2 years later, we felt the echo. But this time, it was in a totally different place. Banking. The exact same game was about to play out, just on a different field. And would you look at that? The same old song and dance. The official story from the suits? The bank failures in 2023 were idiosyncratic. You know what that means, right? It's their fancy way of saying, just a few bad apples, isolated incidents, nothing to see here, folks. Move along, the system is fine. But the ape theory said something completely different. And this time, it wasn't just a feeling, it was quantifiable. The problem wasn't just spreading financially, it was an information contagion, moving at the speed of social media. And this, my friends, is what we call the quant ape flex, when the cold, hard data just completely demolishes the official story. And here it is, the killer number, pulled right out of an academic paper from 2023. During the Silicon Valley bank run, the banks that had a lot of chatter about them on Twitter before the run, their stocks dropped an extra 6.6 percentage points. That's not random. That's a direct, measurable link. For the first time, panic became a variable you could actually track. This timeline from the study just lays it all out clear as day. This isn't just a theory anymore, okay? It's a documented fact. Social media isn't just a place to post pictures of your lunch. It is a financial accelerant. The same amplification that powered the GME squeeze was now scientifically proven to work in the banking world. Human sentiment was officially moving faster than the old school rules designed to control it. So that brings us to today, right now. The market desperately needs a distraction, right? A big, shiny object to get everyone to look at. And boy, did they find one. The AI boom. It's a gold rush, it's a revolution, and it's the perfect story to make everybody forget about those massive cracks we just saw forming in the foundation. And the numbers, they're just insane. We're looking at a projected growth of over 175% in power demand from data centers just by 2030. This is not just hype. This is a massive, expensive build-out that is sucking up all the money and attention from everything else. NVIDIA's own CEO is out there saying their chips are going to replace the entire $1 trillion data center market. I mean, the amount of money flowing into this one single thing is almost impossible to wrap your head around. It's the perfect story of progress in the future, right? But while everyone is staring at the shiny new AI toy, the apes on places like Superstunk, they're still pointing at those cracks in the foundation. They're still warning that the core problems, that infinite liquidity, those unresolved bets, they never went away. They're talking about a real risk of systemic collapse. And that's the real story here, the contrast between the shiny AI hype and the raw fear of a total system failure. All right, this is it. This is where we close the loop we opened at the beginning. It's time to connect the GME glitch, the banking echo, and the AI distraction. It's time to show you that hidden danger we've been talking about. So let's just break it down nice and simple. Step 1, the GME glitch. That was the proof of concept. It showed that when we connect, we can seriously stress test the system's core. Step 2, the Silicon Valley bank echo. That was the amplifier. It proves social media can spread panic faster than any regulator can even think about reacting. And that brings us to step 3, the hidden danger. Those two forces, they're not separate anymore. They fuse together, creating a brand new, totally unpredictable kind of risk the markets have never, ever seen before. So we gotta give this new thing a name. Let's call it the Amplification Effect. It's what happens when social media slams the gas pedal on information, or panic, causing the market to react so fast that all the old models and safety nets are basically useless. It's like a new law of physics for a digital world. And this, right here, is the one question that should be keeping the suits up at night. They're running around, trying to patch the code, tweak the rules, whatever. But the real vulnerability? It isn't in their computers. It's in us. It's raw human emotion, fear, greed, wanting a fair shot. And now it's amplified on a global scale. How in the world do you write a patch for that? Look, just so we're clear, none of this is financial advice. This is just educational banter. We're connecting data points. You gotta remember, the market is a casino, and the house is always designed to have an edge. So you have to do your own research. Trust yourself. We are watching this chart like a hawk, and while you wait for that next candle to form, go ahead and grab your free gear. Sign up for Public, get yourself $20 in free assets, check out Webull for their latest Bitcoin promo, or you can grab some NVIDIA stock on Moomoo. All the links are right there in the description. Now, smash that like button, subscribe to the tribe. Apes together strong. So I'll leave you with one last thought. If this amplification effect is now a real force of nature in the market, what's the next glitch the suits are totally missing? Where do you think the system breaks next? Drop your theories down in the comments. Let's see what the tribe can come up with. Stay sharp out there.